Hey guys, so today I'm going to be going through my Vanguard portfolio update to share with you what's happened in the month of October. So I'll be going through my ISA portfolio first, show you what's happened, and then I'll be going through my SIP. And lastly, to end off the video, I'll just briefly talk about why I decided to switch from my employer pension over to this Vanguard SIP. And I've actually spoken a bit about this before in previous videos, but I thought I would just touch on it again for anybody who is new here to this channel. Right, so now we're over to the spreadsheet. So again, you can always see the same fund names. As I said before in previous videos, the strategy that I currently have, I'm happy with for now. Some people, continue to make comments and say, why don't you just invest in the VWRL, for instance, and just leave it there? I can, and I totally agree that you don't actually have to complicate investing. You could invest in one global fund and that will be totally sufficient. But this is what I'm doing right now. I'm not saying that I will do it forever, but at least for the next couple of months, that is the goal. Of course, when I decide to change that strategy, I'll let you know via these videos. But yeah, this is what it is for now. So we've got the 6 different funds that I have, the same goal weights as usual, and these are just weights according to what I have a preference for. So 50% into a global fund because I want the majority of my money to go into a global tracker because I believe that's the majority of what you need for long-term investing. I say I believe, it's what I've learned over reading and doing my research. This is really the way to go. And then I've got 10% in other funds that I want extra exposure to because I already have exposure to them via the VWRL. I just want extra exposure, and that is pure speculation on the fact that I think these are regions that will do particularly well in the coming years. And for me, that's the Pacific Ex-Japan Fund, so Asia, the S&P 500, which of course is the US, the Ftse 250, which is UK companies, and it's not the top 100, it's the next 250. And then the ESG emerging markets, so these are not so well developed countries. And then this all world high dividend yield is literally to build that up for a time when I want to use this income from my portfolio. So that's way down the line, but I'm thinking ahead. So as you can see, my current weights are different to my goal weights. So I'm at 48% for VWRL, 9.9% for Pacific Ex-Japan Fund, 10% exactly bang on for the S&P 500, which is cool, 12.7% for the Ftse 250, so I'm over for that one, and that's because in the month of October, this was the only fund that I had invested in. 10.1% for the ESG emerging markets, so again, pretty much bang on, and then slightly under for the all world high dividend yield. So for the month of November, when I get paid, I will probably invest in both the all world high dividend yield and the VWRL. Yeah, I think that will be it for the upcoming month. So for the returns that I have seen, so for the VWRL, I have seen a return of 19.42% since I started investing in this fund. So it has been, I think, about a year and a couple of months since I've invested in this fund. So 19.42% is great. If you are an investor yourself, you will probably have realized at this stage that the market currently is going through a bit of a boom. So even though these numbers are so high right now in comparison to last month, I'm not getting too excited about it because I think maybe it will level back out again. But, this is what it is for now, 19.42%. Then for the Pacific Ex-Japan Fund, I've got 12.92%. So everything is up compared to last month. And I forgot to mention, if you're curious to see how my portfolio has performed over the months, then you can check out the playlist, which is linked down below in the description, so you can kind of see how things have evolved over time. Then for the S&P 500, I have seen a return of 30.78%, which is obviously, it's actually my best performing fund. Is it a surprise? Not really. Do I wish I had more invested in it? Of course, but this is what it is. But 30.7.8%. The US market right now is crazy. So that's not that surprising. Then the Ftse 250, I've had a return of 12.34%. So that is very, very good. And the emerging markets, I'm still in the negative at 1.39%, but last month I think it was negative 4%. So it's gotten better, but this one notoriously doesn't seem to be doing that well for me. Hopefully over time it will start to pick up, but so far it's not really been the greatest. And then lastly, I've got the all world high dividend yield, which is at 17.73%. So everything has gone up quite a bit since October. So as you can see here, for the month of October, the total return was 9.21%, but currently it is now at 15.3%. So that's gone up by nearly 6%, which is crazy. But you can see that back in September, it was at just under 15%. But generally, this has been the highest return I have seen to date. And the goal is that it will increase over time. So I have been invested in all of these funds now for at least 1 year. Some of them have been closer to a year and a half. Some of them have just been a year. So I'm hoping that now I'll start to slowly creep up towards that 20% return, because, I'm working my way to 2 years being invested in those funds. So over the next couple of months, I'm hoping to see this continue to increase. But again, we just don't know, because we don't know what's going to happen with the markets. But 15.3%, I'm definitely happy with. Okay, so now we are over to my Vanguard SIP. You can see that it's the same as always, that I'm 100% invested in the Target Retirement 2050 fund. It's an accumulation fund, so any dividends I receive will be automatically reinvested. And as a target retirement fund, if you don't know, they will they will themselves de-escalate the risk of my fund as I get closer to that retirement age. So basically right now I'll be invested in quite a bit of equities, but as I get closer to that retirement age of 2050, it will be less equities or less stocks and more in bonds. And the fund will just do this automatically for you. So you're paying for that service. But as you can see, my current value is at £16,918.76. So that is a change of £1,836.29. So that is really, really good. And it says that my total rate of return is 14.88%. So again, that is a really good return rate actually. This has been, I've been invested in this fund since I think March. So yeah, not quite a year yet. And then in March of 2022, I will make another big transfer over to the Vanguard account. So now let's have a little bit of a chat as to why I switched from my employer pension over to a Vanguard SIP. So after I had done lots and lots of research into investing and stocks and shares and pensions, I decided to really look into my employer pension to get an idea of what what my funds were invested in, and also to get an idea of what the fees were. These were all things that I had no clue about 2 years ago, but obviously once you know better, you do tend to want to do better. And so I realized that I was paying a fair amount in fees for my employer pension. And after knowing a bit more about Vanguard and knowing what a SIP was, which is a self-invested personal pension, I realised that I could actually move the funds over from my employer pension and pay a lot less fees. And so those fees are generally what you pay to invest your money and also for your account to be managed. And I decided that I didn't want to pay higher fees, because over time, as my pension pot grows, those fees will feel more tangible. So right now, it may seem like a minimal amount, but I was thinking about the long term and thinking how, when it becomes a huge pot, that could be hundreds, if not thousands of pounds that I'm losing out in fees every single year. For no reason, essentially. Every provider charges different fees because they can, it's the nature of capitalism. But that was one of the reasons why I decided to switch, because my fees with Vanguard are lower than they are with my employer pension. And also with my employer pension, they did have options of different funds, but they weren't as appealing to me as the Vanguard funds. And I wanted to be more in control of that. So by switching to Vanguard, I felt like I had more control in terms of what I decided to invest in. And another thing, which may seem minor, is that I actually find the Vanguard platform so much easier to navigate than my employer pension platform. That's not a big deal per se to a lot of people, but for me, I just feel like it's just easier to handle. I feel like I'm more in control. I feel like I'm more in the know. And, you know, the control aspect, one thing I want to say is that the best thing with investing is really to kind of put it somewhere and leave it and let it do its thing. So even though I'm saying more control, I'm only invested in one fund in my pension, my Vanguard pension, and that will be it now. I'm not going to invest in anything else. It's just one fund, but still it's something that I have chosen. It's something that I understand, I've done my research into. So yeah, that's really why I switched over. But a few other things to point out is that I'm currently, my pension money that I contribute every single month and my employer's pension contribution still goes into my employer pension. They do not pay it into Vanguard. So that still goes in there. So that pot is still accumulating, and then I can do a yearly, once a year transfer over from my employer pension over to my Vanguard SIP. So as I said before, in March, I will do March 2022, I will do that transfer over. I don't know exactly how much it will be yet. It may be in the £10,000 region. And so I'll just do a big transfer over to my Vanguard SIP, and you will see that through these portfolio updates. But yeah, I still have to do that because my employer will not pay into my Vanguard SIP. They will only pay into the employer pension, which is totally fine. And I also always have to keep a minimum of £1,000 in my employer pension. So when I do that big transfer in March, I cannot get that account down to zero. And that's also totally fine. But these were all things that I made sure I fully understood before doing this. I needed to understand what would be okay, what would work, what wouldn't. So I didn't just go into this blindly. So this is not something that I recommend doing if you don't really have an idea of what's going on. Again, this is just because I've done lots of research and I felt comfortable. So that is it for today's video. I hope you've enjoyed. Thank you so much for watching, and I look forward to seeing you in the next video real soon.